Hello everybody, welcome to Clef Investments. Today, let's continue to talk about 529 college saving plan. Last week, we talked about the basics, and I recommend you to not buy it if you have enough money. Because when your kid is in college, when you need to withdraw, the stock market might be in the bear market, which is not a good time to sell stock and withdraw. But I think I have found a better way and want to share with everybody. So first, let's talk about how to invest in 529 plan. So a common choice is to pick a age-based portfolio. In an age-based portfolio, basically each portfolio's asset allocation is adjusted automatically and becomes more and more conservative as your kid getting close to college age. And when it's at college age, likely your portfolio becomes a treasury bond, which is safe but doesn't have much growth. So you may lose lots of opportunity if you choose this way. On the other hand, some 529 plans offer choice of investing in index funds such as S&P 500. So for example, this is a plan I have for my kid, and I put 100% into the Fidelity 500 index. We know that in the long term, this index can grow very well, better than most of the actively managed funds or even hedge funds. And when I search online, looks like some 529 plan said they offer the choice of investing in ETF. If they do, you can pick QQM. But I did some research. I couldn't find such a 529 plan. If anybody knows how to do that, please leave a comment below the video. But S&P 500 is good enough. And even if you do not invest in a 529 plan, if you have enough money left in your regular account and you can pay off tuition easily with your regular account, then I wouldn't recommend the more conservative age-based portfolio. This is because it can lose lots of opportunities. But if you invest in S&P 500, it has huge growth potential. What if when you need to withdraw from the plan while your kids are in college to get the tax benefit, and the stock is in a big bear market? What would you do? You don't want to sell the index because you believe it will go back up again. It's the worst time to sell. So what I recommend is because you have enough money outside of your 529, then in the bear market, you still need to sell. Assume you sell $N from your 529 plan, which is tax-free, and you use this $N for tuition. But on the same day, you can borrow the same amount of money using short box in your regular account, and then you can buy index. You can buy bank like VTI or QQM or some other similar ETF. And that means in your overall portfolio, you didn't sell it because on the same day you sell the same dollar amount and you bought it back. Because selling funds in 529 doesn't generate tax. Then you buy a similar ETF outside of 529 is not a wash sale. So you can buy a similar ETF on the same day. And by doing this, you still have the tax benefit of 529 and you're not losing the investment opportunity. And in the same time, if in the small chance that there's a bear market when your kid is in college, you still don't have to sell it when the market is bad because you have enough money to rebuy the ETF back and not losing the future opportunity of the stock index when the stock market goes back up. This is equivalent to not selling the stock and borrow money for tuition, but you actually sold the stocks for the tax benefit. So I think this gives you the best benefit for investing in 529. And you can invest aggressively into S&P 500 fund and without worrying about the bear market. Okay, that's all for today. Thank you.